if you look at what's happened to the yield curve, so the difference between long rates and short rates, it has flattened from, I think, 155 basis points last March to 45 basis points today. And if the Fed did go 50 basis points in March, which they might, I think that it would be one and done then, we'll end up with an inverted yield curve. And then what are people going to think? Well, an inverted yield curve and the flattening yield curve says, watch out, something's going on here. Either growth is going to disappoint or inflation is going to be much lower than expected, or both. And we think both is right.
Cathie Wood's flagship fund, the ARK Innovation ETF, or ARKK, is down 30% year-to-date and is more wildly volatile than practically any fund on the market. So when Wood was invited to CNBC's halftime report, she took it as an opportunity to defend the fund and its deflated price, now down to $68.80 from its peak of $155 a year ago. During this interview, ARK Invest founder, CEO, and CIO Cathie Wood talks about ARK Invest research, innovation in bargain basement territory, massive upside surprises, and analysis around transformational technology. Wood also speaks about criticism and shorting innovation. Hello and welcome to Money Talks. In today's video, ARK Invest's Cathie Wood discusses her trading strategy and what she makes of all the criticism she's faced as her portfolio has taken a hit. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
The supply chain issues have lasted so much longer than we anticipated that they would take a while to work out, but not 2 years. So the question is this supply chain related, and will these inflation metrics unwind? I think a lot of what's going on is supply chain related. I know it's become unfashionable to use the word transitory, and so we won't, because it's lasted longer than we expected. However, I do think there's going to the deflationary forces that are building up in the economy today are pretty strong. Two are secular, one is cyclical. And the bond market is sort of getting this.
But a big part of the interview was focused on a more personal attack against Cathie Wood, who was named Best Stock Picker in 2020 by Bloomberg's then editor-in-chief, Matthew Winkler, after she correctly predicted Tesla would one day be worth more than $1 trillion. When asked about the Short Innovation ETF, or SARK, launched late last year by Tuttle Capital Management, which tracks inverse performance of ARKK using swaps contracts for the sole purpose of betting against Wood's picks, she dismissed it outright. They're not doing any research, they are simply shorting innovation, she said.
And so that's the cyclical source. There's an inventory buildup. If you look at the record-breaking inventory buildup in the fourth quarter GDP report, you'll get a sense, while inventory to sales ratios might be low, as the consumer switches off here. And if you look at the last 3 months of either retail sales or consumption, the consumer has gone pretty flat. Meanwhile, you've got the double ordering and triple ordering by manufacturers and wholesalers because they were missing sales before. So I think there's a big inventory problem brewing here. And it's going to hit within the next 6 months in terms of that recognition. That's the cyclical side of inflation. The secular side has to do with innovation. So our focus is understanding cost declines associated with technology and when costs are going to drop low enough so that demand in different sectors will pick up. Just give you a few examples. So for every cumulative doubling in the number of whole human genome sequenced in the world today, costs drop. The cost of sequencing drops 40% if you're Illumina, 28% if you're a PacBio on the long read side. Robotics, for every cumulative doubling in industrial robots, cost decline 50%. We have major labor shortages. So that cost decline will cause increased adoption and will lower the risk associated with wage inflation continuing. And then artificial intelligence costs, I gave that one, down 60% per year if you include both hardware and software. These are major, major deflationary undercurrents. The other side of disruptive innovation is creative destruction. And what does that mean? It means the existing world order, the traditional world order, is going to face disintermediation and perhaps destruction. And we certainly see this in everything transportation. In retail, there's still a lot of creative destruction taking place.
Right.
In the healthcare space, right? So what's going to happen is these companies whose products are either going obsolete or who have not invested enough to update them, they are going to have to cut prices. So we see major deflationary forces, and I think the bond market is onto this. If I didn't see some signal supporting what we're saying in the marketplace, like that yield curve, I'd probably say, gosh, I don't know how long this is going to last. But I have a feeling these deflationary forces have entered the bond market cycle.
Cathie Wood of ARK Invest also said that the technology companies in her innovation-focused portfolio are drastically undervalued, and she believes that her fund's recent sell-off is short-lived. Her flagship fund, ARK Innovation ETF, was caught in the epicenter of the tech-driven sell-off in 2022, down 26% year-to-date. Some of her big holdings, including Zoom, Teladoc Health, and Roku, have tumbled as much as 70% this year on expectations of rising interest rates.
Well, I find that very interesting, especially the last. When you think about it, it's simply a call. Well, they're shorting innovation, and that seems to me over time that's not going to be a business. If you ask me, consider the source. But they're also not doing any research. They're simply shorting innovation. If they were doing research and could point us to reasons why what we have included in our portfolio is not going to participate in the new world order, then we might have a conversation about it. But the idea of shorting innovation in America is ridiculous, I think. But here's what I do know. When I see, and this is investor psychology, when I see people so sure that we are wrong, and that they are willing to set up companies simply to short innovation, and to set up funds to short innovation, you know that investor psychology, the pendulum, has swung so far in one direction that if we're right, then the rewards are going to be enormous.
Wood said she doesn't invest in any of those mature big tech companies like Microsoft. ARKK bets on companies in the forefront of disruptive technology in a variety of industries, from DNA to automation, robotics, and artificial intelligence. Her top holdings include Tesla, Exact Sciences, UiPath, and Coinbase. Despite the big underperformance, her ARKK has attracted more than $70 million in net inflows year-to-date. The innovation investor said she believes inflationary drag on growth stocks will end ultimately, and that deflationary forces will return. And that brings us to the end of today's video. What do you think about Cathie Wood's analysis on inflation and ARK Invest's performance? Tell us in the comments. Also, don't forget to like and subscribe. We'll see you soon with the next video. Thank you so much for watching.